continue the conversation about Nigeria's capital markets by diving more into specific earnings. Let's start with oil palm. Presco PLC's most recent financial results published on the Nigerian exchange. There they are, 93% growth in revenue, profit after tax 217%, 104.2 billion. Going forward, we've also got Okomu Oil also releasing its earnings, but the big news, of course, was Okomu's dividend that it declared just on Friday. But there's the revenue, 73% growth, profit after tax 94%, almost 40 billion naira. The dividend, 26 naira final dividend. You add that to the interim of 10, 36 naira, dividend yield of about 6.6% as at the market close on Friday. Payout ratio of 86%. Let's jump into it. Mobifoluwa is the additional, is the investment research analyst at Afrinvest West Africa Ltd. Joins us to discuss further. Thank you so much for being with us. Good morning. Happy Eid as well. So I guess starting with Okomu, what do you make of, just starting with their earnings, the 73% growth in top line, the triggers for that?
Like you said earlier, like you said, it's an impressive, performance from Okomu, and not only Okomu alone, across the market, across the sector.
Yeah.
We've seen them, despite the hard economic environment, we've seen them, turn out these impressive earnings over the period of time. And for Okomu, right, I would say the trigger is in two forms, from the price perspective and then from the volume perspective. So we saw some level of increase in the price of Okomu. I mean, when you trace it back to the global markets, you then see how CPO, when I say CPO, I mean crude palm oil price, how it has, fared in the past year. And what we've seen in the markets is we saw that the price has moved for about, increased about 20% in 1 year. And this was mostly driven by, some demand and supply, pressure that we've seen in the global market. And particularly when you take a look at the price part of the conversation, you see that the price of CPO has increased basically because there has been a shift from the other edible oils like sunflower oil to palm oil, and this is basically because of the geopolitical tension that we've seen in Russia and Ukraine.
Yeah.
So what that means is just to put a context to that.
Yeah.
Russia and Ukraine are the largest producers of this sunflower oil.
Right.
So which is why during the war, you see that there is no adequate supply in the market. So they shifted to palm oil.
Yeah.
So that sort of puts some demand pressure on palm oil in 2024. So now, taking a look at it from the supply perspective as well, we've spoken about the demand part of it, then talk about it from the supply perspective. You see that factors like the El Nino weather condition that we saw last year.
Yeah.
Also last year, we recall that most of these big boys in the market, I mean, in terms of production globally, the likes of Indonesia, the likes of Malaysia, they are cutting back on their supply to the global market, and what that means is reducing the supply in the markets. So we sort of see the demand going up, and then the supply you see coming down. So that sort of puts pressure on price globally, and that's dovetailed into the local markets, right? Then that's why we see prices of palm oil increasing in the markets locally. So now, that's on the price part of the conversation. Then let's take a look at the volume of these industry players. So take a look at Okomu, for example. You see an increase of about 7% in their volumes last year, and this was mostly because they've put in some strategies to increase their productivity. You see their average yield moving from about 4.1 metric ton per hectare, moving to about over 5.2%, 5.2 metric tons per hectare. So a mix of these factors, give birth to what we are seeing in their numbers in terms of their top line for Presco, for Okomu. We're seeing that impact on their numbers.
What do you make of the increase, the cost of sales growing by a margin larger than revenues for Okomu? What are the triggers for that?
Okay, so Rusus, you agree with me that the market, the economic environment was really tough in 2024.
Yeah.
Not like it wasn't tough the previous year, but it was tougher in 2024. Talk of the inflation environment, talk of, the inflation environment, high inflation environment, exchange rates, in that same year. So we see that this is just what we're seeing in the cost of sales is just an implication of those triggers, those hardship that we've seen in the economy in that period in 2024. So just take a look at the input cost. Input cost for Okomu was high as high as 80% in 2024. So these kind of things, contributes to the costs of these market players, and it affects their cost of sales.
What do you make of the dividend, though? The 26 naira dividend that they declared, and then I guess final dividend at 36 and so on and so on. What's your takeaway from that?
Well, for me, I'm not really surprised about the dividend, because take a look at their numbers. You see an EPS at over 40%, 40 naira per share, right? And taking it back to historically, Okomu has consistently pay dividend to it. I feel like they have they care a lot about their investors, shareholders. So they really take it into pay dividends consistently over the years. So this for me, I don't think it's surprising, but it's commendable actually.
Real quick, if we look at Presco, they released their earnings earlier. I guess. And they also, they're bigger in terms of revenues and total assets and so on and so forth. In fact, that's a nice question. Just I guess for the both of them, the total asset side, it grew for both companies, 148% for Presco, and I think about double digits for Okomu. What's your take there in terms of, is it the reevaluation of the assets that they have? What's your take on the growth in total assets for both companies? I'll take it from they have different drivers. For Okomu, for example, it wasn't more unlike Presco, where we see them, buying into, investing into Ghana through the Ghana oil palm production company. So for them, it was more of them accumulating more of inventories, right? And then also, because we see inventory almost doubling in 2024. And then when you take a look at it again, you see that their cash, they were able to, generate a lot of cash from operations, and this sort of, helped to bolster their total assets. On the other side, like I mentioned, for Presco, it was more of the fruits of, the recent acquisition of the Ghana oil palm production company. Yes. Okay. Now, so finally, your outlook for, I guess, CPOs, for these players, and going forward for fiscal year 2025, how do you see things playing out? Is it a continuation of 2024, higher prices and volumes and so on? Oh yes, so I believe the triggers are still in place. The pricing, we still expect prices to continue to be elevated for the rest of the year. From January to now, we've seen about 10% increase in the price of CPOs globally. So we think that this will continue to to linger throughout 2025. However, the only downside risk to that, to the increase in the pricing, is maybe the de-escalation of the Russia-Ukraine war, how that pans out eventually. But then we think it doesn't really have a lot of impact now. It might be somewhat gradual over time. And then when you take a look at it from the volume perspective, we think that they will continue to, what they've been doing, they should continue to do it to increase their volume over the period of time. And then another thing is we think that they would be able to, based on the weather condition, right? It's more favorable for them. The El Niño weather condition is in play now. So we think that will contribute to the volume that they will be producing over time for the rest of the year. And then when you take a look at it from their cost of sales, right? We don't see any. We think that the pressure will still linger, right? That's why, although we've seen inflation, coming down, I feel like that's still on the papers for now. The impact is still there. We are still seeing things are still expensive. FX is still, except CBN continues to give support in terms of supply in the market. But overall, we think the market, it's a positive one for them. Although it might not be as as strong as we've seen this year. So we think it might cool off a little bit, but it's still going to be a profitable one for them.
going forward.
We appreciate your time. Mobifoluwa Adesina, Investment Research Analyst at Afrinvest West Africa Ltd. Thanks for talking CPO with us on the show. Thanks so much.